The big hyperscalers and chip makers are sucking up all the capital, while pure-play software companies, the very companies Bitcoin often correlates with, are getting killed. These software names are being viewed as disruptable by AI, and Bitcoin, currently caught in that same software trade bucket, is being dragged down by the same fears. For Bitcoin to decouple, it must prove it isn't just a tech stock, but a fundamental piece of global. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
A few people woke up in the past few months and decided I want to own Bitcoin. They haven't owned Bitcoin already. So there's very little new capital coming into the space, as far as I can tell. This past summer, there were a number of treasury companies that got very overvalued. They were ones trading at 3 times net asset value, other ones trading at eight times or more of their net asset value. And so a lot of that had to come out of the market. That excess valuation had to come out of the market, that enthusiasm. So yeah, there has been kind of selling pressure. Then I think there's a little bit of a self-fulfilling prophecy of the 4-year cycle. That basically people said, well, whatever it hits in Q4 of 2025, that's going to be the peak for a while, so they want to get out. I don't think the 4-year cycle really has any more credibility to it in the way that it did in kind of Bitcoin's more inflationary earlier years, where the halving cycle was a much bigger factor. But I still think it has a psychological impact. So I think that contributed to this. We've also seen, many software names are down. So even though the NASDAQ is doing well, a lot of that recently is hardware driven. Yeah. As well as, kind of the big hyperscalers. And kind of these more pure play software companies have really gotten killed. They're all, they were expensive previously, now they're kind of viewed as potentially being disrupted by AI to varying degrees. And it's possible that Bitcoin is kind of caught in that trade. I mean, I know that there were some people spooked about quantum for a while, the quantum risk. I think that is overblown in any sort of investment time horizon, but I have heard from a number of credible institutional sources that basically it used to be to say 5% of institutional allocators would ask about quantum as a risk, and that had jumped to 30% over the past several months. And the way that works is even if an institutional investor thinks there's a low risk of a quantum computer disrupting Bitcoin security, if they say, well, it's a 5 or 10% chance in, say, a 5-year timeline, then they calculate that in their expected value outcome. So if you expect, if there's a 5% chance you get zeroed out or nearly zeroed out by some sort of tech that comes out of nowhere, then that kind of disrupts your whole pricing mechanism. So I think there's been a bunch of factors that have done this, and I think Bitcoin has to work through this. But yeah, my timelines tend to be longer than what happens in a given month and a half. But I do think that it is cheap here, is how I would view it.
Is there any relationship whatsoever between Bitcoin's demand and gold and silver's, and as a matter of fact, the commodities overall, their demand?
Well, so one of the theses I've seen put forth is that once gold and silver is sold off, it would allow Bitcoin to catch a bid. Kind of like how Bitcoin doing pretty well might have previously sucked some of the enthusiasm out of, say, the silver market, because if someone is interested in kind of hard money and particularly likes the more volatile hard money, then previously that would have been people interested in silver, and they've been into Bitcoin or kind of broader crypto. And it's possible that as gold and silver and platinum have done really well, that kind of same hard money crowd says, well, why would I own Bitcoin or crypto when I can own the metals that are soaring? Now, as we've seen, at least in a very small sample, as we've seen a sell off in the precious metals, it's not been to the benefit of Bitcoin. Bitcoin also sold off. So I'm not sure that I would link them much here. I would say that I think a correlation that does matter is that I think that the broader crypto space, there's like $1 trillion in market cap in the broader crypto space outside of Bitcoin, and I still think a lot of that's overvalued. So I've been a kind of a long-term bear on most crypto outside of Bitcoin and stablecoins, and I still think that's a big overhang. And there are many entities that cross-own, so they'll own multiple different cryptos and they'll own Bitcoin. And if those other cryptos start doing poorly, they might have to just deleverage or degrowth their portfolios in Bitcoin as well. In addition, it's bad for the, it's at least in the short term, potentially bad for the narrative because there's just more negative news to focus on in the crypto space. You can talk about the negative impacts of meme coins. People can talk around corruption associated with President Trump's meme coin and associated crypto ventures. Some of the news that has kind of come around on that. So it kind of tracks all these negative headlines that Bitcoin can get lumped into. If Bitcoin is like virtually separate from that. In the long run, I think it's healthy for Bitcoin for all these other crypto things to kind of stagnate down closer to their like total addressable market, which I think is pretty small. But in the near term, the intermediate term, while they do kind of melt and stagnate, it's hard to envision that it doesn't pull down Bitcoin to some extent. Now I still think that over the next couple of years, global liquidity and overall just the ongoing so-called debasement trade likely contributes to Bitcoin upside. So I'm still a buyer. I still think it's good to dollar cost average into it. I think it's probably, if you check in 2 years from now, it's probably higher than it is now. But there are some headwinds. And I think one of those is the kind of the stagnation of the broader crypto space.
Has broken in the short term. When metals sold off recently, Bitcoin didn't catch a bid. It sold off too. Alden believes this is due to cross-ownership contagion. Many entities own a mix of Bitcoin and broader alt cryptos. As the trillion-dollar market cap of overvalued utility tokens melts down, these players are forced to deleverage their Bitcoin positions to cover losses elsewhere. The negative headlines from the broader crypto space, including meme coin corruption, act as a heavy anchor on Bitcoin's narrative.
I say 2026 is a toss-up. If I say 2026 and 2027, my estimate would be Bitcoin outperforms. I certainly could be wrong on that, but that'd be my base case. The way I would put it is that when Bitcoin moves, it tends to move rather decisively, right? So in lately, that's not been good because it's been decisively kind of down. But when it does catch a bottom and shake out some of these weaknesses, so maybe people get over the quantum risk for a period of time, and they get past the 4-year cycle risk, and they get past kind of the broader crypto contagion. When Bitcoin does run, it can run kind of like what we saw gold and silver do over these past 6 to 12 months. So when it does run, I think probably would outperform stocks. The question is, does that run happen in 2026? Does it happen in 2027? Does it kind of split the difference and start happening in late 2026 and then go into 2027? I don't really know about that timing. So I mean, my approach has always been to be diversified. So I own equities both in the U.S. and globally. I've generally avoided long-term bonds in favor of precious metals. Which has served me well. To the extent that I have bonds, I generally keep it shorter term, just for a little bit of cash liquidity, dry powder. And then I've had a multi-percentage slice in Bitcoin. And that's over a very long period of time, that's done quite well, even though it's been weak lately. And I generally find that rebalancing is helpful. So when, precious metals are absolutely soaring, and they become overweight in a portfolio, it's nice to kind of trim those back a little bit. When stocks are soaring, I trim those back a little bit. When Bitcoin is soaring, I kind of trim that back a little bit, at least in my liquid portfolios. And that allows kind of structural growth without kind of getting caught up too much in any one asset class. I'm structurally bullish on most commodities in general. Okay. So certainly it doesn't really hurt any of the theses that I'm operating under. Obviously, people, many people in your audience or your investor base are more specifically in mining and mining stocks. This can be very dramatically important for many of those. I would zoom out and say, broadly speaking, we are now in industrial policy, meaning that we're not really operating on free market principles. We're operating more on like mercantilism, and we're operating more on some degree of kind of top-down, things that are happening now. And that often happens during fiscal dominance. So that happened back in the 40s and 50s. And I think that's really kind of what the 2020s and probably 2030s end up looking like, is that there's some kind of just more top-down strategic stuff happening. So they've been taking stakes in kind of mineral companies. This the whole tariff policy has been kind of very kind of top-down, trying to fix the trade deficit and things like that. So I do think that this kind of thing is going to keep repeating. I do think it's rational for any large country to try to have stockpiles of critical minerals that can last a long time. I think they should have stockpiles of uranium. They should have stockpiles of many types of rare earths, because the trend that we've been operating under has been this trend of globalization. It's kind of this view of like the end of history, especially after the fall of the Soviet Union. It's like, okay, we're kind of operating under this new kind of a rule of law in the world. But as certain imbalances kept growing, and as certain powers kind of grew, we are entering a period now where both policymakers and those who run corporations are interested in more resiliency in their supply chains, redundancy, which is on average costlier because globalization and single points of failure, while they work, are disinflationary. But then when you have to start, building kind of duplicate systems, and you have to assume a more adversarial mindset, and things kind of get rapidly shut off, potentially. That's more inflationary, more redundancy. But I do think that's a direction that the world is heading in, and I think that it should head in the sense that if you have any sort of meaningfully impact on running a country, I do think it's relevant to have stockpiles of things that your economy really can't live without for any material amount of time.
While Alden views 2026 as a toss-up year for Bitcoin, she believes that the ongoing debasement of currencies will eventually force a decisive vertical move in 2027. When Bitcoin runs, it runs like a coiled spring, much like what we've seen in gold and silver over the past year. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.